Mswatu inkosi ithula akayithathe akahambe nayo akayithathe yotenza bakhe wone akayithathe.
Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
Very good afternoon to you. Thank you for tuning in to Nedbank Business Watch this Wednesday afternoon, the 18th of February. My name is Sifiso Ngumalo. Happy to co-host this program with Lungalele Makakula. Good afternoon.
Afternoon, Guni. How are you?
Doing fantastic. How are you?
Great. I'm good.
Great.
Lovely to be here.
Great.
All right, good afternoon. Thank you for tuning in. This is Nedbank Business Watch. You do watch us on our YouTube page. We are at Eswatini TV and on DSTV as well, channel 286. Nedbank Eswatini has access to various flexible credit solutions, and among these is the overdraft. Overdrafts remain one of the most convenient and reliable short-term lending tools when used responsibly. Mtabula Dlamini joins us in studio to tell us more about the smart financial tool and also give us clarity on who is best suited to apply for an overdraft today at 20 past 2. Do not miss this interview.
Also on our program today, as the Kingdom of Eswatini and the rest of the continent step deeper into the African Continental Free Trade Area, the conversation has largely been about growth, bigger markets, open borders, and new opportunity. But indeed, beneath that optimism lies a quieter and more complex question. When trade moves faster than protection, who owns the idea? In today's economy, value no longer lives only in factories or the farmland, but it lives in brands, it lives in design, in code, and in creativity. And now, with AI capable of replicating creative work in seconds, the risk is no longer a theory, but it's immediate. Now, for artisans, for designers, for innovators and entrepreneurs that are building from Eswatini to the continent, protecting their IP is no longer a legal afterthought, but a very urgent business strategy. Registrar of Intellectual Property, Dr. Celukolo Lulu, unpacks how local creators and businesses can safeguard what they build in this new era. That conversation right after our business news that we are going to look at right now.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. You're so tuned into Nedbank Business Watch. You've just joined us. Welcome. And now for our business news.
Now, first story, Eswatini's trade surplus narrowed sharply to 80.8 million emalangeni in January this year. That is down from 459.4 million emalangeni in December 2025. This is contained in the recent Economic Developments Report for December last year and January this year by the Central Bank of Eswatini.
The Central Bank of Eswatini states that the contraction of the trade surplus to 80.8 million emalangeni in January this year, down from 459.4 million emalangeni in December last year, was largely driven by a steeper decline in exports relative to imports. Export earnings fell by 16.2% month-on-month to 3.0 billion emalangeni as sugar and soft drink concentrates exports were lower in the month. On an annual basis, however, exports rose by 6.1% compared to January 2025. On an annual basis, however, exports rose by 6.1% compared to January last year. Imports totaled 2.9 billion emalangeni, declining by 6.4% month-on-month, resulting from the reduced electricity and food imports in the month and declined by 1.0% year-on-year. Seasonally adjusted estimates place exports at 3.6 billion emalangeni and imports at 3.3 billion emalangeni in January. This resulted in an adjusted trade surplus of 369.4 million emalangeni. The Central Bank of Eswatini states that the trade direction analysis indicates that South Africa remained Eswatini's dominant trading partner in January, accounting for 70.7% of exports and 68.9% of imports. Other notable export destinations included Nigeria, Kenya, Mozambique, Zimbabwe, and Tanzania. These collectively accounted for 18.9% of exports. On the other side, China, India, the United States of America, Ireland, and Germany jointly contributed 17.8% of the total imports during the month. At the end of January this year, the total public debt stock stood at an estimated 38.1 billion emalangeni, equivalent to 39.7% of the gross domestic product. Compared to the previous month, public debt fell by 5.1% from 40.2 billion emalangeni recorded in December last year. The decline, according to the central bank, was driven by reductions in both domestic and external debt. At the end of January this year, external public debt was recorded at 18.9 billion emalangeni, representing a decline of 3% from the previous month and accounting for 19.7% of the gross domestic product. The decline was primarily driven by sustained recovery of the lilangeni against major foreign currencies in which the debt is dominated, as well as debt servicing undertaken during the month under review. Domestic debt declined in January this year by 7.1% to 19.2 billion emalangeni, down from 20.6 billion emalangeni recorded in December last year. The Central Bank of Eswatini says at this level, domestic debt was equivalent to 20% of the gross domestic product. The reduction in domestic debt was partially attributable to the government's repayment of the Central Bank of Eswatini advance, coupled with Treasury bond maturities during the month under review. In the month under review, Treasury bonds remained the dominant domestic debt instrument, accounting for 65% of the total. Treasury bill represented 20%, while domestic loans and the Central Bank of Eswatini advance contributed the remaining 15%. Reporting, Nelson Langamandla Mbabane.
The Ministry of Commerce, Industry and Trade has trained small and medium enterprises under fashion design on the importance of intellectual property. The Principal Secretary in the Ministry of Commerce, Industry and Trade has promised that the ministry will continue trainings in intellectual property for concerned businesses as they have the ability to uplift the economy.
Today, we gather around a powerful truth. Eswatini is rich in creativity, talent, and cultural heritage. Yet for too long, much of this value has remained informal, underprotected, and under-commercialized. Our designers, artisans, furniture makers, and visual artists are producing world-class work, but too often without the intellectual property protection needed to fully benefit from their innovations and creativity. This program is therefore timely, strategic, and necessary. Government is clear in its priorities. We're not only celebrating creativity, but we are pursuing jobs, enterprise, growth, and inclusive economic participation. The fashion and visual industries sit at the intersection of youth employment, women empowerment, cultural preservation, and export diversification. When properly structured, the creative sector can absorb large numbers of young people, create sustainable small businesses, and open new export pathways for Eswatini.
Designers say they have been enlightened on the importance of intellectual property, something which they admit they did not take seriously.
What I learned is the importance of branding your products, the importance of registering your product with the IP office, because sometimes we make products and we try by all means to export our products, not knowing the safety of ensuring that your product's IP is registered. Because you will send your products outside the country, somebody copies your ideas, or they even register. In a long run, that hits your pocket.
Sesikufunzile ukuthi njoba bathi asivikele ema-designs ethu nema-brands ethu, kutoba lula kokuthi uma ngabe umuntu sengimkhanza ukuthi so uyendile i-design yami noma so ikopile ngimthathe into task.
As ma-designers sesitawukhona ukuthi loku sesirejistile for le intellectual property timbo tethu bangakhona ukudeba labanye, even if sebadebile, so discover ukuthi sebakuthathele umsebenzi wakho yakhona kuhamba uyovula i-case.
Ngifunze bomgcoka balokhu register i-brand, most especially if you are uyi-designer yangwane and if you are playing the long game. Mina ngithi the long game sho ukuthi awucabangeli linamhla lodwana bawucabangeli laSwatini kuphela.
The Principal Secretary in the Ministry of Commerce, Industry and Trade has promised to scale up trainings on the importance of intellectual property across all sectors, ensuring that entrepreneurs, artisans and business owners are better equipped to protect their innovations. Reporting, Nelson Dlangamandla, Vuminkosi Nisambabane.
All right, so that marks the end of our business news. It's 12 minutes after 2.
Dr. Celucolo Lulu joins us for more on the very same conversation you just looked at on our business news, intellectual property, after the break. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
The program. Welcome back to the program, and thank you for staying with us as African countries, including the Kingdom of Eswatini, gear up for trade under the African Continental Free Trade Area. Borders are now opening and markets are expanding, but with opportunity comes a lot of risk. As goods and ideas move freely across the continent, are local businesses ready, or are they exposed? Exposed to their products being copied, their designs being rebranded, and their hard work redistributed without protection. In an era where AI can replicate creative work in seconds, what can artisans, what can designers and entrepreneurs do to safeguard their original works, rather? To answer all these questions, we are joined by Dr. Lulu, the Registrar of Intellectual Property. Always a pleasure talking to you. Thank you so much for honoring our invite on the program. As AFCFTA evidently continues to expand trade across Africa, how would you propose we rethink the topic around intellectual property, not just as a legal issue, but an economic issue?
Yes, thank you very much for having me back here. We always say, or at least what we're trying to do as the IP office is to transition from looking at IP as a legal construct into one that speaks to commerce, business. Yeah. How does that give you value as a business person? So we are making that change.
Yeah, and you know, there's a lot of many small businesses that still see IP protection as something for large corporations, and perhaps that shouldn't be a way of thinking, especially right now. What are they missing by thinking that way?
All right, there is a lot of what you miss if you're not registering or taking IP seriously. You know, one of the first ones is with registered IP, you are able to have that in your books of accounts. If it's not registered, it really doesn't go in there. So with registration comes value. And what we are also saying, I was encouraged speaking to the designers today to hear on how they are looking forward to, registering more of their IP. We've made it even simple for them to say, at least, for instance, the brands that are highly distinctive, they can come directly to the IP office rather than using attorneys. Yes, attorneys, patent attorneys, patent and trademark attorneys are recommended. But for the simple and distinctive brands, we've made that pathway to say, small businesses, this is also for you. Yeah. Don't put it out for the future. It's something that you can do as you start.
Yeah, and that's critical. And if we were to frame for the viewer at home, and of course for our local businesses, in practical ways, what are some of the most common ways in which products get exploited or let's say copied when they enter big markets?
Right. Without the registration, that's the starting point. It's so fundamental. If you have the registration, at least you have some interventions that you could use to stop those who have infringed your products. We had during the session today some of the designers actually telling us that, they have a Russian brand, you're selling in your hundreds, but somebody just comes, they have the big muscle, they can just simply copy that and they're doing it in the tens of thousands. So if you have the registration, it's so easy, you simply stop them if you have the IP protection.
Yeah, and then of course we have to talk about the advent of artificial intelligence, which has been the topic of conversation, I guess, for a very long time now. And I suppose even in this industry with which we are discussing, it is very topical because it has changed or sped up the way at which the way at which original works can be replicated. How is this industry keeping up with that reality?
We say to the practitioners within the industry and generally to say, don't look at AI as a threat or as a risk, rather embrace it as an opportunity. Yes, you are able to, the little that you could do before, it is now, it's multiplied. Use that, ride on that. But if you have the protection, that's where IP, the importance of IP comes in, because whatever method that you use to infringe or counterfeit, whether it's AI or any other technology, you're still liable for infringement. So embrace AI, look at it as an opportunity.
Yeah. Let's talk to a potential musician, a creator that is listening to us right now. Could even be a startup that is listening to us right now. What is the first immediate step that they should take to protect their work?
Like I said before, we've availed this opportunity for them to come directly to the IP office because we understood. I think that came out of understanding that the professional services may be costly. It would mean choosing between paying rent or staying afloat in your business. So we understand that. We appreciate, we empathize with our local SMEs, but because of the importance of making this journey easy to get IP protection, we've said come directly to the IP office. The only thing that you pay are the government fees, and then we do the registration for you. And also to say to them, don't look at this as a cost. Look at it as an investment. You are investing in your business. This is a long-term investment in your business, and that also sends a signal to investors, to your customers, to say you are serious about your brand. They should also take it seriously. Yeah.
How would you propose, how strong is Eswatini's intellectual property framework compared to the rest of the region?
Right. We are on par. I would say we are on par with our fellow counterparts. As we speak, we have, as the IP office, we have about 6 international treaties that are before Parliament for us as Eswatini to ratify, just to strengthen the IP protection that we already enjoy. So that's how serious we are. Particularly then for the fashion industry, we are looking to accede to we call it the Riyadh Design Treaty. That one speaks to fashion, to protect, to simplify the application process for designs, which is a big feature in the fashion industry. Once we accede to that, it will make it easy to apply for protection here, and also, to be able to quickly and simply, in a more simplified way, to go against infringers in any other country.
Yeah, and perhaps on that very same topic, I want us to double down in terms of making that clear, because my next question was going to be, looking at trade and cross-border trade continually growing, I suppose, as we premised when we started our conversation. And the question would have been, how enforceable is our local IP, our rights beyond our borders? Does this registration here offer continental protection?
We currently, under the AFTA protocol, the main discussion as we speak is there is an IP protocol underneath there. It's the one that is being looked at. We are probably going to finalize it this year or early next year. That seeks to bring protection, or at least coordinate the protection across all of Africa. But over and above that, we also have the international treaties, where if I want protection now in any country that you think of, you simply make the application, and then you designate that country where you think you'll be using it as your market. So there is protection across the world.
Doctor, thank you so much for your time. Always appreciate having you on the program, and the conversation has been safeguarding creativity through intellectual protection and property protection, rather. And he is quite frank, and he is emphasizing the idea of IP as an investment over it being a cost, because there's been many conversations, some people proposing that there's bureaucracies around the cost, but he has clarified everything, and we hope that everyone is going to heed to everything that they have said. Today, let's go for a quick ad break. We'll be back shortly. Their program continues.
the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Right, welcome back to the program. We did report in our business news that Eswatini's trade surplus narrowed sharply to 80.8 million emalangeni in January this year, and that is down from 459.4 million emalangeni in December last year. Now, the recent economic development report for December 2025 and January 2026 by the CBE shows also that the total public debt stock stood at an estimated 38.1 billion emalangeni, which is 39.7% of our GDP, marking a 5.1% decline from the 40.2 billion emalangeni recorded in December 2025. Net foreign assets receded sharply to 10.5 billion emalangeni in December 2025 from 15 billion emalangeni in November. Now let's start with the headline number as we welcome our economist, Sanele Sbia, who joins us virtually to help us make sense of these very big numbers. Sanele, a drop from 459 million emalangeni to 80 million emalangeni is quite significant. We went from a three-digit to a double-digit there. How should we really interpret this narrowing trade surplus in context?
Thank you, Mr. Numalo. Good afternoon to you and also a good afternoon to the viewer. So when you look at the numbers, Mr. Numalo, I think it is crucial that you factor in, or we do factor in, seasonality in terms of our of our export and the surplus therein, because that in December there is always that December rush where you see a lot of export demand, more especially coming through from the textile sector and also the services sector, Mr. Ngomalo, that is in the tourism sector there where we are exporting that service as well. So given that we're just fresh from December coming into January, usually you would see those movements in terms of the overall surplus, in the sense that you then tend to see just a recalibration and a rebalancing of trade from that surplus in December, where you then start seeing a sharper fall in exports compared to imports. And then also there are the larger and moving geopolitical pieces, Mr. Ngumalo, where we've seen countries like South Africa, really finding new trade partners. And, coming also from the standpoint of South Africa, we do know that South Africa, had a very the conditions they have been good in terms of the growth figures, but in terms of they still remains our major exporter partner. But in terms of what they would really be exporting, you then find that given the good seasons and all of the rains, you tend to see that rebalancing and that recalibration.
Yeah, and the report also suggests that exports fell faster than imports, particularly in key commodities like sugar and soft drink concentrates. How concerning is that from a structural standpoint?
The diversification is key, Mr. Ngumalo. Market diversification is key. But overall, when you're looking at the trend, again, it's a rebalancing, recalibration, and also the seasonality of our sugar, of our industry. And in terms of exports, Mr. Ngumalo, if you look at let's take sugar for instance, our major export destination would be the US. So what you're seeing happening with the exchange rate is regardless of the amount of sugar, even if we're sending the same amount of sugar into the US markets, but because the exchange rate is appreciated so much, we're now talking of higher 15s. That's the lilangeni to the dollar, and you're also talking higher 18s on the euro. So we moved from 20 region against the euro, and then from a 17-18 region against the US dollar. So there are also those exchange rate impacts into what we are seeing into that story, because what you're then earning now in terms of exports, you're now gaining a fewer dollars for your commodities.
Do you suppose we should see this as a temporary monthly fluctuation, or does it point to a deeper vulnerability in Eswatini's export base?
It seems we are seeing a new equilibrium in the lilangeni dollar exchange rate, Mr. Ngumalo. So we're most likely going to see that going through into the first half and also right throughout this financial year. And if the metals continue to rally the way we are seeing them rally, and if South Africa gets the fundamentals right, and if they can roll out those infrastructure spendings that we've seen President Ramaphosa talking about in his zona there. So we should continue seeing the lilangeni strengthening in global markets, and that actually is going to have an impact in terms of our of our commodities, because a strengthening currency is a double-edged sword, Mr. Ngumalo. It makes your imports cheaper, but makes your exports relatively expensive in the global markets, and those effects would be then transferred into the trade surplus type of region, even though you would still be sending the same volumes out there, but the cash money that you're now getting for those very same commodities somehow it just diminishes a bit. So now our exports are fetching, let's say, around $15.90 dollars instead of $15.90 malangeni per dollar instead of the 20 type of region that they were fetching before, and relatively they are now expensive to consumers in the global north. So that is going to be continuously intrinsic into and built into that. But what then it also brings is a more stable financial environment where you would then be in a position to be able to drive industrial diversification as imports are becoming relatively cheaper. So that means you can now see a bit of more investments coming into some industrial expansion base, so that we do reap the benefits of the improving currency conditions.
And public debt has declined to about 39.7% of our GDP. On paper, it does look positive, I'll admit, but does it really meaningfully improve our fiscal sustainability?
I think what we need to first commend is we are back on that level. But in terms of have we changed much, lad, we're seeing part of the effects into that story being the exchange rate appreciation again. So now you need fewer Malangeni to pay the very same amount of debt. The debt remains the same, but what has actually changed is how much of the local currency do we now need to pay that debt. So it does give a bit of breathing room into our fiscal purse, but it does remain quite volatile to those exchange rate fluctuations. And, we saw that as we're getting closer to the zone, now we're back on the 16 region. And as we're getting closer to the budget where we're seeing, we're going to see a operationalization of that zone. So now all eyes are on Finance Minister Konongwane and Finance Minister Rekenbeck there to see how well we are going to really push the economy forward and how well we could maintain these gains. So it's an issue of saying the improvements are noted, but have we changed our debt strategy, and are we growing and diversifying the economy to ensure that going forward we have a broader tax base to even absorb an exchange rate depreciation in the future, because that's going to have a huge impact in terms of the repayments. But analysts and myself included, we're seeing the exchange rate worst case scenario stabilizing around the 17 mark, if that would be the worst case scenario, and we can get closer to the lower 15s best case scenario for the duration of this government of national unity. And then those are going to be recalibrated again once we start seeing more activities being rolled out there, like those infrastructure bills, the realignment of supply chains and the logistics in South Africa. So there's quite a lot that we are looking into that could have positive spin-offs into the exchange rate. But there are also those geopolitical risks that are always inherent into any analysis that we do. But the medium term does look a bit promising in terms of maintaining the debt stock. But we should caution that it doesn't mean now that we should have improved their appetite, because right now the story is you are somewhat below the 40% mark. So that means you can find a couple of cents again from through borrowing. But remember that these are largely linked to exchange rates fluctuations. And right now, the change that we are seeing is largely influenced by exchange rate fluctuations and the fact that we're continuing to pay and the fact that we're continuing to see GDP grow. So it's more a mathematical type of rebasing and calibration. But in terms of what we need to do in practice, we do still need to remain quite cautious in terms of our debt appetite as a country and focus on expanding the economic base so that we do expand our production capabilities. But it does make it a bit easier.
Sorry to cut you in just 30 seconds. We have run out of time, but I do want to ask you, if you had to pick one that could hurt the economy more in the long run, would it be domestic debt or external debt? And which one should we actually be more worried about right now in 30 seconds?
Right now, it's more foreign debt because of exchange rate volatility.
Sanela Sbi, our economist, thank you so much for your time. Let's go for a quick ad break. We still have more in store for you, so stay with us.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
All right, so welcome back. You're still watching Nedbank Business Watch. Thank you for staying with us. Mdabula Dlamini joins us again in studio today to talk about overdrafts. Overdrafts remain one of the most convenient and reliable short-term lending tools available when used responsibly. Mdabula, very good morning, afternoon rather, Nkosi. Apologies. We are discussing overdrafts again this week. Just to clarify, what is an overdraft and how is it different from a traditional personal loan?
Good afternoon, viewers at home, and thank you, Ntombe, just to provide a simple explanation of what is an overdraft. An overdraft is a financial solution that is being provided by the bank to our client, whereby they can access funds from their account which they currently don't have. Yeah. So it's a short loan facility that we provide to our client over a period of 12 months.
Okay, so how is it useful, for clients that have demanding situations?
Overdraft come handy when there is an element of emergency needs. When you are experiencing challenges financially, we do provide such facility to our clients whereby they are able to access the funds and to provide them with some form of peace of mind at that moment of their needs of the funds.
Okay, so who is best suited, Nkosi, to apply for an overdraft? You know, we have so many issues, back to school. Some parents are still paying for their children's school fees. We have loans, we have debts with the child logs. There's a lot happening in our lives. So who is best suited to have an overdraft?
Okay, yes, I think the sensible conversation that we like to have with our client is to encourage savings. But in a situation where you find yourself in a struggling moment and there's a need of funds, we then extend an overdraft as a soft loan that we provide to our client so that they can be in a position to be relieved from the stress of the needs of funds at that point in time. So any client who is banking with Nedbank is eligible for that facility currently.
Okay.
Yes.
As you said, because it's different from a traditional personal loan, since you said it's a short-term loan. So how's the interest? Is it also the same with repaying a personal loan?
Yes, it is relatively the same. The difference is that when you're taking an overdraft, it is let me give us a simple example. If we have given you an overdraft of 10,000 and you find that on that 10,000 you have only used 5,000, you are not charged an interest of 10,000 which has been provided to you.
Okay.
You are charged the interest of the 5,000 that you have overdrawn your account. So it is different from personal loan because it is not based on the funds that is provided to you, but it depends on how much you have utilized on the funds that have been awarded to you.
Okay, so it's funds paid over a year, in a year rather.
Yes, the facility is provided over a period of 12 months. You have liberty to clear it over 12 months, like you'll be paying monthly installments toward your OD. You also have liberty to say, I'm still in the process of making my financial journey better, so then let me clear it after 12 months. And as much as you are expected to clear it over 12 months or on the 12th month, you still have liberty to come back to the bank and request that the bank should continue to extend the overdraft for you for the next 12 months until you are in a position where you are able to clear off.
Okay, surely an overdraft needs a disciplined customer, Ngosi, and it can be quite risky if misused. So what guidance do you usually give your customers when applying for an overdraft?
Thank you, Mtombeni. I think it's very vital for our clients to understand that this facility is to enhance important needs of the funds. And as part of our financial chain, we do encourage clients to be in a way of being safe and then not to use this facility for things that are not important. We encourage anyone who wants a loan at Nedbank to have a purpose of that loan, so that when he's making a payment, be it a short loan or the overdraft, but be in a position to be able to say this is what the funds are used for, than to be in a situation where you have been reckless with the fund. We do encourage sensible utilization of this facility.
Okay, so what's the process in applying for an overdraft? Is it easily accessible?
Yes, it is accessible for all our clients at Nedbank, and be it you have a current account, you are automatically eligible. And if you have a saving account, we do encourage that to come through the bank. We are able to switch your account to be a current account, and then you can access the funds immediately once the savings account has been converted to a current account. So anyone who has a salary is eligible to come to Nedbank and can be given this facility as a means of assisting the clients when there is a need of funds.
Okay, many of your customers, Ngosi, travel a lot, in particular outside the country. So is it can they use it when they're outside the country? Can they use the overdraft account?
Yes, initially this is a fund that is being provided on your account. So in anywhere in the world, you can access the funds, be it you are in Eswatini or you at SA or even anywhere around the world, the globe, you are able to access the funds.
Okay, so how does it work really? Do I need to have a negative balance on my account, or I can still utilize it when I have, for instance, 500 amalangeni and I still swipe, using the overdraft account?
Yes, you've touched a very important description, the negative balance. Ideally, an overdraft is a form of providing you to have an authorized negative balance on your account. So if you have a 500 positive balance and you want to access item that is over 500 malangeni, you can swipe on that shop wherever you are, and then the transaction that you are trying to perform at that point in time, you are able to purchase that item instantly.
Okay, are you able to assist customers with their limits? For instance, a customer wants to increase their limit, or is it determined by my salary and my personal loan debts?
Well, we have an algorithm that we use at Nedbank that we use the calculations to access and to be in a position to advise how much you can get as an overdraft. But the primary document that we use is your payslip to arrive to that position. So, and maybe to add on the affordability part, we currently also have a promotion at Nedbank where all our current account owners who are eligible for the overdraft are receiving SMS to advise them that there has been a pre-approved overdraft, and we encourage all those clients to come forward if there's a need of funds at that point in time, because their overdraft is already approved.
Yeah.
So they just need to come to the bank and sign the form, and they will be provided the overdraft immediately.
Okay, just before I let you go, Ngosi, do I need to physically come into the bank, or if I need an overdraft, or I can apply for it online with your officers?
Thank you very much for that question. Yes, you can access the overdraft through our online platforms, and you can also come through our bank for assistance. Any bank where the name in the door is Nedbank, you can come and you will be assisted effectively at the end of the day.
All right, your contact details, how do they reach you?
They can reach me through my email. My email address is ma.dlamini@nedbank nedbank.co.za. And my contact number is 7802-2819.
All right, thank you, Nkosi. Thank you for your time. Well, there you have it, the overdraft. For more information, to contact Mtabula Dlamini at Nedbank. And also, they are on Facebook, interactive with customers. So make sure to get that overdraft. Apply for it today. Let's go for an ad break. We come back with Sifiso and Sibande for today's market analysis.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
All right, welcome back. This is our final segment of the program, the market analysis. Sifiso Nsibande joins me now for today's market analysis. A very good afternoon, Sifiso. Thank you for coming through. So what is happening in the world of markets today?
Yeah, thank you for hearing me once again. We are actually looking forward to the budget speech that's going to be taking place in South Africa next week. A lot of commitments are expected to come out of there in terms of how they're looking at the economy going forward. We're actually expecting that there will be a combination.
Apologies. We need to take a quick ad break. We'll be back shortly.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. Apologies for that. We continue with our final segment. The market analyst, Sifiso Nsibande, was just explaining on what to expect on next week's budget, South African budget speech. Sifiso, you were explaining, what we can expect next week.
Yeah. So next week we're expecting the Minister of Finance to actually table a combination or a balance between fiscal consolidation, which is trying to much as possible to reduce debt, but also initiatives that will bolster economic growth. We're not expecting much of tax hikes because being a GNU, we know that in the past the DA has been resistant to that, and they don't want to shock the public in terms of tax hikes. But we are expecting that there will be a bigger allocation in terms of infrastructure, energy and mining, coming out of the mining indaba actually in South Africa, where they were actually thinking about carbon tax that's going to be removed, especially for the likes of Sasol. So that's going to be, we are all looking forward to that, and it's going to be a very interesting budget speech actually coming up next week.
All right. In the interest of time, so let's just go over today's numbers, starting off with the equities. What's happening there today?
Yeah. So with the equities, there's a couple of things that are actually happening. Number one being investors are actually sort of concerned about the big spending on AI. I'm sure you've been hearing a lot about AI. Yeah. So the software sectors or companies are actually having hundreds of billions of spend on AI. That has actually caused investors not to put in money in those sectors because they're actually thinking that there's not going to be much value, or the spend is not going to be equated to the benefit out of that because of the impact AI is going to have. So there's a lot of uncertainty about AI. So I think those sectors are actually coming under pressure right now. So it is actually muting, or rather causing the S&P 500, for an example, not to do very well. If you look at the FTSE 100, there was a bit of improvement there, mainly because the top 100 that are listed in the London Stock Exchange are actually international companies. So once there's an improvement in terms of macro factors, you tend to see the FTSE 100 actually doing slightly better. The JSE slightly coming down with the anticipation of actually what's going to be happening in South Africa next week. But I must say that there is a slight improvement because of the overall improvement because of the dollar that is actually also coming under pressure. So that is actually, so there's a little bit of some jitters actually happening on the JSE at this point in time.
Right, so we want to commodities now.
Yeah. So gold, we saw gold also gaining once again because of the concerns that they actually have in terms of Iran and the US. So gold gained, but it's actually lower than the $5,000 per ounce mark that we were last week, but it's better than what it actually was yesterday. Brent crude sort of stable because of positive information that's coming out of the negotiations between Iran and the US in terms of what's going to be happening with the concessions that speaks to what do you call it? What Iran is supposed to actually stop producing in terms of nuclear weapons. That's what I wanted to say.
Okay.
So that's what's actually coming out of that space.
Yeah, and then lastly, we take a look at currencies this afternoon.
Yeah. So the dollar and the rand, it's been a yo-yo. If you're looking at 15.96 right now, but we were actually sitting at 16 just yesterday and the day before. So the dollar is a little bit strong. Because they were expecting positive minutes coming out of the Federal Reserve minutes, where there's going to be clarity in terms of what the interest rate's going to be like going forward. Because we're still in an environment where there are going to be interest rates cuts, probably for the rest of the year. But those minutes are yet to be released. But there is an expectation that the minutes will favor interest rate cuts, which then borders well for the dollar, and that's why it's coming out positive.
Okay.
With the British pound, a little bit of some concerns there. The inflation numbers that are actually coming out are positive, but the rest of the other data that's coming out of the UK is giving mixed signals. So investors are just staying away, being wary of that space, and that's why we are seeing the British pound actually coming under pressure.
All right, thank you, Sfiso, for unpacking that for us today. Well, there you have it, today's market analysis, and unfortunately, we've come to the end of our program. Thank you for tuning in. Make sure you get that overdraft. Do visit any Nedbank branch for more details. We've had a lovely time here with you today. We'll see you again next week, Wednesday at exactly 2 p.m. Enjoy the rest of your day.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.